Hello traders, this is Igor from FX Igor YouTube channel, and today we will talk about simple Forex trading strategy that I will reveal in this video. So if you like to trade Forex on the intraday level, one of the simple strategies that I apply very often is a strategy where we wait for a pullback to enter into the trade. In this video, I will show you exactly the steps that you can see very often in market and you can use as the trading strategy. This kind of strategy happens a couple times per month for the major currency pairs, usually euro dollar and British pound dollar. And here I will try to explain what you need to watch. So the blue rectangle is the pivot point area. This orange simple moving average is 50 moving average, and this is the VWAP that we will today, maybe we will not talk a lot about that, but sometimes you can use it as a tool, especially if you trade the stocks, because the VWAP is a little better than simple moving average 50 in stock market. So what we are looking for, the first trigger that you need to find is you need to watch relative strength index indicate, and you need to spot the major trend. For example, here on 30-minute chart, this is the major trend that we can see. So that trend, bullish trend that you can see on the chart, starting from the April 22. So here I will draw a trend line on the relative strength index indicator. As you can see, yesterday in the second part of the day, we broke that kind of the relative strength index indicator. And this is the most crucial thing. Now, what you're doing is you will not enter into the trade right away, especially if it's a second part of the US session. What you'll do, you will wait for another day to enter into the trade, especially if you see that on that day there's no some strong important news or any fuel that you can see in the market. Now what are you doing is you wait for the new day. So this blue rectangle that you see on the charts, starting just the beginning of the new day, you can see the simple moving average in the bearish mode too. So the simple moving average 50 is in a bearish mode. You see the whole picture, especially on the 4-hour chart. You can see that bearish move here, slow but bearish. You can see on 30-minute chart, on the 1-hour chart, you see this bearish move. Everything is clear. But now we need to execute the trade, and what we're waiting for is that price go here, pivot point. This is the pivot point area. I have a special formula how I calculate that, but for you, just watch the pivot point price level, and you want that price touch that level in the early morning. So in the early morning, either during the Asia session, either in the opening London range, you want the price touch the pivot point area. When you see that, it's a trigger to enter into the trade if you believe the trade is bearish. So the best opportunity, the best price level will be somewhere around that pivot point area. Now what's happened? The most important thing is to set the best stop loss. The stop loss area should be this, the highest level here. It's a 40 pips stop loss, but if you want to create a longer term trade, this is the best opportunity, so you don't need to worry about the price action. Sometimes we can see a spike of 30-40 pips, very strong, and then we go down and bearish trend occurs, but the problem is a lot of traders just touch their stop loss, which was tight. So tight stop loss for the intraday and the several days trades, the swing trades, are not so good. Now when you do that, you will realize this. Several hours you will see how price going down, then again pivot point. So you will have a couple times of retest, especially during the opening range when price can fluctuate a lot. You don't touch any, you don't enter and exit into the trades all the time. Just put one trade, entry point, bigger stop loss, and just relax. You can put the target. So how to monitor the trade? The trade should in 1 or 2 sessions do very important thing, break the low. So this was the more than 24 hours low. low from the yesterday. And today, during the euro session, we have the early close below this level. When you see that, only that, when you see that, you can move your trade to the break even when you break the yesterday low. So you need to manage your trade, and the best way to manage your trade is to move your stop loss to the end. After that, you can relax and to see the end of the day what will happen. If you believe the overall trend is bearish, you can see the new low, especially during the US session, which I'm waiting right now. The next target that I want to reach is this low here, the low from the April 28th, yesterday low. However, if you believe that this is not the only level, you can close part of your trade, and the rest you can just put to go to the next target, which was the 7 days low from the 1.3235. And this is the way how trading should be. Simple, with clear entry position, clear stop loss, and clear target. So please, if you have some questions, you can ask on my YouTube channel. I wish you a great day, and bye-bye.